Thank you for hanging with us. Again, my name is Aracely Panameno. I'm the Director of Latino Affairs for the Center for Responsible Lending. We are the policy and research arm of Self-Help, community development financial institution that has been in business for more than 30 years. And we have a footprint across the country in 48 states and the District of Columbia in terms of lending to the communities that we care about. And I am going to propose the revolutionary idea that if the central topic of this particular conversation is access and inclusion to financial services, I will submit to you that the financial services and products that have been offered to our communities are not the kinds of products and services that I want to be included in. So I'll start there, and then I will elaborate my point by, we already know all the set of bad news in terms of the mortgage crisis, subprime lending, and the prevalence of abusive lending that was made available to, particularly to African Americans and to Latinos in this country. We have lost a tremendous amount of wealth that we have yet to rebuild, even to get to a 50% level of homeownership. But besides a home, and I'm assuming is my presentation up? Oh, so I'm getting to that. So after homeownership, right? So homeownership is the most important financial transaction that most American families will make in their lifetime. After homeownership is buying a vehicle, buying a car. Most recently, we did a research at Center for Responsible Lending, and the primary researcher, so I am actually speaking on his behalf, is Delvin Davis. His credits will be at the end of the presentation. I will only focus on 3 slides because I do not want to have this be a soliloquy, as we were instructed. So if you could please go to slide number 5. So the focus of this research on auto lending has to do with discrimination in auto lending. And so we recently conducted a survey of American consumers who had purchased their vehicle at the dealership and had gotten the financing through the dealership of 1,000 consumers, and they had purchased their vehicle over the previous 6-year period. And what we found was that if you were black or brown, there was a premium that we pay for being black or brown that had absolutely nothing to do with the fact that whether we were shopping, comparison shopping, and doing our homework before we actually hit the floor of the dealership. It had absolutely no correlation. In fact, the opposite was true. In the data, if you're looking at slide number 5, you're looking at our first finding, that if you were African American and Latino, that that percentage that you're looking at was the percentage of people that participated in our survey who had actually done comparison shopping prior to buying their vehicle. And so you can see that nearly 40% of Latino consumers in our survey, and these are comparable consumers, they have comparable credit profiles. So we're comparing apples to apples. 39% of Latinos that had done comparison shopping actually got, you see the average APR that they got on their auto loan. You compare it to the baseline, which is the white consumer. And so in the white cohort, we even fare worse than the white consumer that did not comparison shop. So if paternalistic, we will say to black and brown consumers, oh, you need to get your financial education, so please, Deidre, continue your financial literacy activities, and please be sure to do your homework. Well, the data shows that the opposite is true. So that is to elaborate on my earlier point that the inclusion and access to the financial services being made available to our consumers today is rigged up. It's rigged up against us. It steals wealth, equity, and income. And all of that lost wealth, equity, and income prevents further economic activity and advancement. It prevents, so as I go to the next slide.
But actually, can you just elaborate a little bit more about rigged up, how it's rigged?
Well, precisely the data that I am presenting right now related to auto lending is one of the examples, right? So you have, these are comparable consumers in terms of their credit profiles. They have done their shopping, they've done their comparison, and yet, if you are Latino or African American, when you buy your vehicle, you are more likely to have a marked up vehicle being sold to you. In addition to that, you are more likely to receive deceptive information about the deal that leads you to believe that you need to pack into this deal add-on products and services. And then finally, to get the icing on the cake or the cherry on top of the cake, the dealership has the discretion granted to them by the banking institution with which it has a relationship to increase your APR up to a certain percentage. And if you're Black or Latino, you're more likely to get the higher end. Hence, in my earlier slide, you saw the variance between the average APR that the Latino consumer, the African American consumer, and the white consumer got. And so if you do the math for the life of a loan, a consumer ends up paying an additional $2,000 or more on the pricing alone, right? On the pricing of the loan. That is in addition to the marked up price of the vehicle itself, and then the bundling of the additional products and services that they led you to believe you needed in order to access the financing. So,
but I think this is a very important point, because what I want to get your perspective on specifically is it the individuals that are executing the practice. You know, where is the rigging or the bias or the inappropriate origination of the behavior coming from? Is it the people in the jobs, or is it the policies or the lending practices itself, or is it both? Because that's going to then lead to, when we talk about, well, how do we solve this? It's one thing to enact something in paper, but then what about the people who are actually dealing with the consumer?
So it is both. So to start out with, the majority of consumers access the financing for the purchase of their vehicle at the dealership. And so supposedly the dealership is providing you a service for which I will agree they need to be paid, right? The finance agent in the finance office of the dealership is providing you a convenience service. But if we go to my next slide, the highest bars tell you that most consumers, regardless of color, are not aware of the discretion that the dealership has been granted by the banking institution to tinker with the interest rate that you're getting. So the language would be, the last time I bought a car, I told the story to Ann Price earlier today. The last time I walked into a dealership, the finance guy told me that available to me was a loan at 5.99. And so I got up, you know, body language as well as your information, access to information, and all of that is power. So I stood up and I said, I'm sorry, we have no deal. Mom, don't make yourself comfortable. We're going to walk off the lot. And the man was very surprised, and he said, why, what's going on? I said, well, I happen to know my credit profile, my credit history, and my FICO score. And I am a prime consumer. Interest rates right now are at 1.9%, so I know that I deserve better than 5.9. And then I got on the phone, called my brother. I said, I need you to go onto this website, plug these numbers, and tell me how much I can get a loan for in my area. And he told me, he says, you can get a loan for $299. And so I told the guy, I said, I can get better pricing elsewhere, so I'm going to go. And he said, no, 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 I'm willing to beat that interest rate. I'm going to give you $199. How can we go from $599 to $199 if he did not have the discretion to tinker the pricing of my loan, right? So there is a relationship that is established. Most consumers think that we can walk to the dealership to make the second most important financial transaction that we carry. And for many of us, particularly for Latinos and the immigrant community who work in construction types of jobs and services jobs, who actually need their vehicle in order to perform their jobs, they certainly lose negotiating power, but even when they try to negotiate, our data shows we end up in the losing end of the stick, right? So we have recommendations in terms of solutions. I'm going to leave that for the latter part of the conversation, but certainly there is power in information at the consumer level, but we need to set certain rules of the road so that there is no premium for skin color in name and origin. Thank you.